Hi, my name is Dr. Jamie Klingman. I am a business broker based out of Tampa, Florida, but licensed in several states. I think what makes me a different kind of broker is I became a broker because I sold my own company and realized how few brokers really understood the under $10 million business space.
My name is Sam Martinez. I'm a business broker with the Exit Strategy Company. And I got into this business because I sold my business as well about 5 years ago. And now I get the privilege to help others exit from their businesses as well. It's Jamie Klingman,
Sam Martinez, Monday.
Monday. Monday, and I can't believe we're talking already about the end of the year. But that's the way it goes. I mean, you start getting into fall, and all of a sudden, you just tumble into December. So, and
I,
getting
yeah.
into the end of the year also means holidays and people wrapping things up and all kinds of crazy and pushing things off till this will be 2026. So, um, yeah, so it means a lot of things. And it also means like spend as much money as you can in your business so you don't pay for taxes.
Except for maybe not spend all of the money.
Correct. And why wouldn't I want to spend all my money as a business owner, get the deduction?
Well, I mean, we want to, let's be clear. Like that's really fun at the end of the year. But if you're looking to sell in the next couple of years, spending all your money at the end of the year while saves you in taxes will make you look much poorer and make your company look like it's worth less. And so while we can do add backs and we can explain you bought that car as really a personal expense, but it was okay as a business expense, but the buyer wouldn't have to pay that going forward. From a lending perspective, and even just from a valuation perspective, we can only add back so much. So, sometimes business owners have a tendency to go on, I like to call a little binder at the end of the year, like, why buy a car when you can buy two cars and a boat? Let, maybe we don't do that.
Yeah, come on. Yeah, most people do. And you know what? Hey, there are some things that the IRS actually allows you to deduct. I mean, large SUV sales, we know at the end of the year, and car dealers know as well. Um, Gosh, it's all the rage because of getting that deduction and it's fair and everything. But how many companies have we seen that have taken their advice of their accountant because their accountant is, especially the CPA, is looking at taxes, specifically taxes, not on if you're going for a sale. And of course, they're doing their job. Hey, take all these deductions. Don't pay this money in tax. You're effectively saving anywhere between 25 and, mid 30% depending on the personal income tax rate. So fair. Problem is that if I want to sell my business within the next year or two, I'm literally losing whatever I saved in taxes times my multiple, times four, times three, times potentially five, depending on the business. And that's a nasty hit.
It is, and there's, even some of those deductions that like end of year parties. That's a big one, right? Like you can spend a lot of money on end of year, we'll call it travel and entertainment category. But there's really only a certain percentage that can be added back at the end of the day. And so at some point you can spend a lot in that category, not be able to get as much of a deduction and hurt your valuation at the same time.
Yeah. And I think there's a little bit more leniency, like for instance, like giving employees a profit share or something like that at the end of the year. If you don't do it on a regular basis necessarily, let's say it's a really good year and you give a lot of, and then, by the way, I'm all for that. The charitable side of me is like, absolutely do that. At the same time, depending on like, especially even like SBA rules and such, where they see one-offs or they see certain things that they're not very favorable about looking, about accepting those type of ad backs. Because they say, well, the next owner might have to do the same thing or whatnot, then you're really hurting yourself in the long term. So I know you've made the suggestion as well, but we tell our business owners, hey, how about you're generous after the exit?
That is always the best time to be generous. I mean, it's good to be generous all the time, for sure.
Yeah, yeah, agreed.
But after an exit is a great time to reward those who've helped you get to that exit.
Yeah. And that way you don't hurt your valuation. so that you have more that you can actually give to others as well. And there's other techniques that you can use here without using your personal gift tax exemptions and all that stuff. That's a whole other conversation. But anyways, but we've also seen some companies who look like we were told that they have a certain amount of value, that they have a certain amount of income. But then we look at their financials and they go through underwriting and they look like they're literally poor. Like they're just scraping by. They're doing okay. Personally, they look fine. And it gets very, very difficult when it comes to, especially SBA. So I guess the moral of the story is, hey, if you know what, I think they should include their CPA early on the conversation if they're thinking of selling, so that and include us or whoever you're working with as a broker, as an intermediary, to make sure that we're behaving or we're doing the right tech, using the right techniques for an exit, not just for tax savings.
Absolutely. And if there's any questions, always checking with hopefully you have a business intermediary or strategist you're working with. So end of the year is a good time to catch up with your accountant and with that person to make sure that you're hitting your goals and set for next year.
Absolutely, man. Absolutely. So, hey, don't look too poor. You're not poor. Pay a little bit of taxes.
Sounds good.